Welcome to the last learning session for this afternoon. I don't know if you're interested in the inflation or just wanted to sit down for a while. I'll be honest, I had a choice of what topics to pick from, and I really wanted to hear his Tommy's talk because I think it just affects us all. So I'm interested to hear what he has said. Okay. I'm Cody Carson. I sit on the Commodity Classic Committee representing national sorghum producers. I farm in the Texas Panhandle, and I hope you get what you came for this afternoon. In case I forget or in case you start to leave, don't forget that this does qualify for CEU credits if you need those. And also, we pick these learning sessions by a group of farmers of what we would be interested in, what we hope makes Classic better and would interest you. So there's a survey at the end. If you love it, if you hate it, if you're somewhere in the middle, let us know so that we can make it even better next year. So with that, I would like to thank Advanced Trading Inc. for sponsoring this session. And at this time, I will turn it over to Mr. Tommy Grisafi. I'm sorry I'm struggling with that, okay. Tommy.
You got that clicker?
Clicker.
There we go. That'll work. We're going to watch some TV.
Hey, great.
Good morning, good afternoon. Thank you for showing up. And hopefully no protesters show up. I don't know if that's a vicious rumor or what's going on here. My name's Tommy Grisafi. I'm with Advanced Trading. And I'm happy to be at Commodity Classic. I haven't been here the last few years, but it looks like it's a good crowd and you're all optimistic, except for yesterday when you came by our quote board. We actually had to shut that down for a little bit. Apparently farmers don't like when the market goes down. Advanced Trading's been in business for 40 years, and about 6 months ago we were asked to pick a title to speak at Commodity Classic. And when I was a young man, and even now I trade a lot of interest rates at the Chicago Board of Trade. And I thought that inflation was going to be a hot topic. Now, 6 months ago when we picked this topic, the deal was rates were going to go up, and then the Fed was going to pivot. But that didn't happen. Interest rates are still going up, and they continue to go up, and it's becoming really interesting. So as I go through these slides, although I'm a marketing guy and I work at a marketing firm, we're going to talk a lot about interest rates because my history from being in the Chicago Board of Trade, in 1990 when I went down there on a high school field trip, I became a runner in the grain room. But in 1991 I applied for a job in the bond room, and we still had interest rates back then. And then they eventually went away for a long time, and interest rates were extremely low for 15 years. And about a year ago, one of our brokers at Advanced Trading said they had a client who wanted to hedge interest rates. And they sent out an email to all the brokers, and I just simply responded, this is how you do it, use this product, tell me how much he wants to hedge, and you do it. And I think he thought I was joking. It was just a two-line reply. This is how you hedge that many dollars worth of interest rates. So a lot of these speeches and a lot of these talks are people coming here saying you need to sell your grain, you need to do this, you need to do that. The truth is, for a long time, money was about 3-4%. Now you're hearing 8, 9, 10%. So if you borrow $1 million, your cost was $30,000 a year in interest. It's now $80,000 or $90,000 a year in interest. And that's a lot of what I'm going to talk about today. I don't know what happened to my slide, but oh, there it is. Don't panic, don't panic. Well, let me put my timer on so I don't talk too long. Okay, there's a John Mellencamp song. I was at my apartment. I have an apartment in Fargo. I live in Valparaiso, Indiana. This John Mellencamp song starts a few weeks ago. I don't know how the heck it popped up. When you're on YouTube, different things pop up. And it just tore my heart out. It was these three farmers talking about how hard farming was. Well, I looked into the slide a lot. The actual people in that slide, one of those guys is John Mellencamp's brother, one's his brother-in-law. But they're talking about how hard the 80s are and how they're just farming for free and how a guy can't make it. And if he would have known in high school it was going to be this tough, he would have went to town to get a job. And when I was flying here from Chicago to Orlando on this beautiful 777 airplane, I looked up how much that airplane costs. A 777 airliner costs $400 million. I'm flying on a plane that's $500 million to see you all, and I look at LinkedIn and I see this. I remember that John Mellencamp song. I was putting my PowerPoint together. I guess it's not hard for me to say with pictures that agriculture's changed a lot. This young man back here is laughing. He's like, that's our planner. We know those guys. I Googled those guys, and they were really farmers in, I want to say, Seymour, Indiana. But it was a little bit of skit. The emotion they put in the YouTube video, it ends up, it was John Mellencamp's brother. This is what ag looks like in 2023. In 1978, the Chicago Board of Trade developed something called the 30-year bond, 30-year bond futures. And that's some of the things we'll talk about now. So when these guys took this picture, we were just developing interest rate futures and options. Now we're still giving talks all the time about how to use corn futures, how to use corn options, how to buy a put, how to do this. When I flip to a few more slides, I'll tell you why I'm disappointed myself. I gave a great talk a year ago, and I told the whole room, this is what you should do in a certain interest rate product. The problem was, I realized I was probably one of the only people in the world, in that room, not the world, who understood what I was talking about. So in my approach today, I wanted to leave this room with 5 tips to handle what's happening in inflation. Number 1, study history. In economics, inflation is an increase in the general price level of goods and services in an economy. When the general price level rises, each unit of currency buys fewer goods and services. Consequently, inflation corresponds to a reduction in the purchasing power of money. What this is trying to say is when the United States government prints $4 trillion worth of goods and there's not enough tractors to buy, the price of tractors goes up. The price of everything goes up. We've just experienced one of the greatest booms in agriculture ever in history, but it's going to come at a cost, and I'll talk about that in a little bit. So when I talk in front of you, I know I only have 45 minutes, and I'd like to speak for about 35 minutes. If by chance I go long, and I don't have time for questions, we're at booth 653. I'm an easy guy to get a hold of. That's what I want you to do. I want everybody to take a picture of this because each one of these podcasts is 45 minutes long. And I've listened to this podcast. Don't take a picture of me. No one wants that on their phone, all right? Take a picture of this, and that's what it's there for. All right, I'll be back in a little bit. I'll be back in 35 minutes. So I have a podcast. I will give anyone who gives it 5 stars. No, I have a podcast called the Ag Bull Podcast. And I get to interview some really neat people in agriculture, but I'm just starting off podcasting. And my friend who has a podcast called The Water Table, him and I, he's one of the owners of Prinsco Tile. And they're the black tile with the yellow stripe. Any of you tiled, maybe you know that brand. We get done filming a podcast together, 2 podcasters podcasting. This is about 2 months ago. He said, Tommy, have you ever heard of Escaping 1980? I said, no, I have no clue what you're talking about. That is not the first time I've ever said that to someone, though. I go, what's Escaping 1980? He said, will you do me a favor, and I'll ask all of you to do the same. I promise you, whether you're 15, 20, 25 years old, or 80 years old, listen to this podcast. This is like getting to go to one of the best college universities in the world, and you don't have to take a test, and it didn't cost anything. So as you go for a long ride, go for a walk, listen to this podcast. Look at these subjects. Is farm history repeating itself? The boom, the slide, bottoming out, USDA steps in, stability, escaping 2020. Now I have to tell you something. If this guy films me, I'm going to tackle him. I know this guy. He's all right, though. This is the brilliance of this podcast and why I'm so excited about it. This podcast was recorded 2 years ago. So 2 years ago, if you went to the bank, young man like yourself, and you said, I just happen to have an extra $100,000, you know what they'd say? Let us hold it for a year, and we're going to give you $250 back. And you go, oh, that's great. I really got $1 million. And they go, okay, congratulations, you might be able to buy yourself a sandwich. That's how low interest rates were 2 years ago. So as you listen to all these podcasts, and do me a favor, if you listen to it, I'm an easy guy to get a hold of. You can email me, you can LinkedIn me, you can Facebook me, you can get a hold of me through the podcast. You can go to Advanced Trading's website, say, Tommy, I listened to the podcast. Because after you get done with this series, they did another series called Corn Saves America. And then after that, they did another series. And I've listened to all of these once or twice, and I've learned so much. I was born in 1972. All I remember about 1980 was my dad being sad because we owned a pizza place, and times became really turbulent in Northwest Indiana. The steel mills were letting go of people. We were having a modernization. And the price of all the commodities that my father bought and my mother for the restaurant exploded. This is, for any of you who've survived the 80s, this is painful to listen to because it can bring up some bad memories. But you should also smile and cry tears of joy because you made it. You didn't quit. A nice man, he's here, I believe, he told us a great story about when his banker made an appointment with him. He was pretty much telling him it was over. But he made it, and he made it because he had a plan. This is fascinating. Now, in this podcast, you're going to hear him say over and over how the government's given this money, how other countries have given money, how interest rates are zero, and inflation's so low. And what's so wild, as you're listening to this podcast, is you know how the story ends. And that's what makes this series so great. Do me a favor, listen to that. Shoot me a text, an email, contact me. I want to hear you say, I listened to all 7. Thank you so much. If you have a podcast you like that is agriculture and economics, send it my way. I would love to learn. Tip number 2, hedge using interest rate futures. Going to the Chicago Board of Trade, the pits are closed. They were barely open, and then COVID shut those off. If I pulled up my screen, I could pull up all these products right now. I could pull up Fed funds, 2-year note, 5-year note, 10-year note, euro dollar, 30-year bonds. And if you think grains trade a lot, grains, when you look at the CME group, are a very, very small percentage of what we trade at the Chicago Board of Trade. Very small. The financial futures at the Board of Trade blow away anything we do. The reason I told you I was sad is because this chart. This chart is a euro-dollar chart. You don't really have to understand what a euro-dollar chart is. You just need to know how to do basic math. I spoke at, Kat, where were we? Farm Futures? I spoke at Farm Futures. This young man was filming there also. Spoke at Farm Futures in January 20th of 2022. And I gave a speech, and all I had was one slide. And that slide was the USDA, not the USDA, the United States debt clock. So if you ever Google United States debt clock, you see this number. And that day, we were real close to flipping to 30 trillion. I'm not sure where it is now, but if someone would Google for me, US debt clock, I think we're at like 31 trillion, and I don't know how to say the numbers after that. It's a big number. And I said, if I think what I think's going to happen, you need to hedge interest rates. And I would recommend for all of you to sell DEES 23 and DEES 24 Eurodollar futures. I said, although you may not understand what those are, I do. And if you don't work with a broker, maybe you would like to hire a broker who could handle doing this for you. I was so proud of that speech. One, it was recorded. I'm not just making this up. But the part that I soonly realized as I walked off the stage, young Max Armstrong, who we just saw before we walked in here, Max Armstrong with that deep voice said, Tommy Grisafi was here talking about how farmers should sell Eurodollar futures. And I realized, not only did Max probably not what I was talking about, and he's one of the brightest minds in agriculture, not one person, I think, in that room knew what the heck a Eurodollar future was. And I just realized I didn't plug in my laptop. So if this shuts off, I just heard da-dunk. This may be the shortest ever. Well, it was a great talk. So Eurodollars back in January were up here. All you need to know is this, is you could have sold Eurodollars at 98. And when euro dollars go from 98 to 97 and you sell a one lot, you collect $2,500. And that is a hedge against interest rates. And so the euro dollar went from 98 to 97 to 96 to 95. I have one friend, dear client, young man, he was absolutely sure interest rates were going to explode. And we came up with this plan, and he sold 10 euro dollar futures. Now, he didn't write it out for the whole $3, but he wrote it out for $2. And he said, I picked up $50,000 and hedged my interest rate. And I said, well, that's okay. Interest rates have went from 3 to 4 to 5 to 6, and you're going to need that $50,000. So it's all fun to come here down to Commodity Classic and say you could have sold 2 years, 5 years, 10 years, 30s, bonds, euro dollars. The problem is now interest rates have already went up, and this trade doesn't look as much fun. Real quick, as we look at this, these are interest rates. These are Fed funds. Fed funds are also a contract that trade at the Chicago Board of Trade. And this lost decade of, anyone, I'm sure some folks in here have seen the movie The Big Short. Anyone see The Big Short? By far one of the best financial movies ever. The Big Short is when it's back here 3 more years, 06, 07, 08, when the housing market blew up. When the housing market blew up and the administration switched from George Bush to President Barack Obama, we started doing something called QE. Quantitative easing, QE1, QE2, QE3, QE out your nose. They started making up this buyback program, that buyback program. All it means is that the United States government was buying their own bonds to artificially keep rates low. You may not know what all that means, but if that line is your heart rate, you're dead, all right? And that was one of the biggest boom periods ever for the stock market. What QE did and what it allowed was QE gave Wall Street the permission to buy everything. Because if you want to make money earning interest, good luck with that. Every 100 grand gets $250, right? And maybe back then it was $500 or $750. Then in 2016, 17, 18, 19, interest rates were going up. We went up a quarter, a quarter, a quarter. And the Fed always has this number that they want to keep rates at about 2%. And then this little thing happened exactly 3 years ago today. We walked out of here, and this was the last time we all saw each other for a while. Not you farmers, because you just kept doing your life and kept farming and feeding animals. You went out with your life. All the people from the suburbs decided it was time to just watch Netflix and just do nothing. And we did that for a long time. And so when the economy started to crash, when the stock market was at 32, 33,000 and it's dropping $1,000, $2,000, 2,000 points a day, the United States government, that first jerk down, that's our Fed lowering rates 0.5%. And this next jerk, that big down move, that happened on a Sunday night. On a Sunday night at the peak of the virus, the Federal Reserve of the United States lowered interest rates from 1% to 0. And our Dow Jones was at 18,000. It was at about 20,000. And the Fed did the most aggressive thing they could do. They said, make money free. And they did. And the stock market went limit down that day and limit down the next day. And then the Fed did something incredible. They said, we're going to do something that's going to make QE look silly. And all the bond market in the world became illiquid. And the United States government said, we'll buy any bond. And one of the greatest companies in all of America, Apple's bonds became illiquid. They said, we'll make a market on any bond in the world. We are a buyer. And the United States government, our ultimate backstop, not only for financial markets, but for farmers in the world, said, we know we have a problem, but we're here to help. And that let people take risk. Now, where we are today is this up here. So other markets we look at are the 10-year note. Now, the 10-year is not as exciting because what's happening is when you go back and look at Fed funds, is that as the United States government raises interest rates, the 2-year, if you watch any financial TV, just turn on Bloomberg, turn on CNBC, put it on mute, I promise you, within an hour or two, they're going to talk about 2s versus 10s. And what they're talking about is that yield curve, and that the 2-year note, as of today, is 1 point higher than the 10-year. Now, something very, very, very important happened today. Are there any bankers in the room? Are there any lawyers? I committed a crime. All right, we have a few bankers. A large bank out of California that I've never heard of instantly went insolvent. So look at your phones. Who's got one of those stock buttons? How much is the Dow Jones down right now? It was down 400 last time I looked. I'm going to go check on my battery. Someone get that answer. I want to make sure my laptop's not going to shut off right here during the show. And the Dow Jones is not taking that well. That the, how much is it down? $350. We have a quarter battery. We're going to go for it. We're going to, if we lose that, it's going to be like, heck with it. He needs to stop anyway. All right. I think I broke my computer. Well, I was kind of on the right track. We'll do the best we can with that. So the 10-year note's not as crazy as the 10-year note's not as crazy as the 2-year note. And what the United States government's trying to do is calm inflation. And inflation shot up very high, and they're trying to calm it. There's only one problem. Every time the Fed raises interest rates, it takes 12 to 18 months to kick in. So right now, there's about a 75% chance we're going to raise 0.50. And so that Fed funds line that was wiggling up, that's got 2 more quarter wiggles priced into the market. But when that bank, there was a bank in California, it's worth $25 billion of equity on Monday. Welcome to Friday. FDIC shut it a few hours ago. Is that right? You read that? Because one of my best clients, they're all best clients, by the way. I don't have any bad ones. All right, hold on. He goes, hey, what do you know about SIBC Bank? I go, nothing except for it's on CNBC. He goes, well, they had some risk to crypto and this and that, and they're going broke. Well, they tried to do a deal, and they couldn't get the deal done. So they go to Goldman, they go to this one, and everyone goes, heck with this. And while they're trying to get the deal done, this young man from New York's like, hey, I have 500 grand there. I want my money back now. So that's called like a run on the bank. Like It's a Wonderful Life. And who was the character in The Wonderful Life who made it all stop happening, right? Well, that didn't happen in this movie today. So interest rates, when I printed this yesterday, the 10-year was at 3.95. It's at 3.75 now. Interest rates have come down, lessened, because we're having a financial problem. All right. Cash is king. Tip number 3, cash is king. In a slang term it is a slang term reflecting the belief that money, cash, is more valuable than any other form of investments tools such as stocks or bonds. Tina was a girl that was so popular in 10, 11, 12, 13, 14, 15, 16, 17. Then interest rates went up. And you're like, I got 100 grand. They go, we'll give you $1,000 interest. Or you could make 24% in the stock market. Well, as they say in the movie Wall Street, greed is good. So everyone kept piling in the stock market. Now last year, the NASDAQ was down 35%. The S&P was down 25%. And the Dow Jones was down about 21%. The Tina trade died. Because this good-looking couple right here, they got millions of dollars, right? And if they're living in Florida, maybe like Ocala or something, I don't know, just make something up. If you're living in Florida and you have $1 million and you give it to the bank and they give you $50,000, that's not bad. But if you have $10 million, which they have, you can make 500 grand. And so Tina died. Tina died quickly. And so as you see the stock market start to come down, you see interest rates start to come up, Tina's dead. Cash is now king. If you are younger than 55, you have no idea what's about to happen. We are in the middle of a major paradigm shift. when it comes to interest rates. I did not know that wiggled. Who did that? Did you do that? The girl who snorted, who helped me with my PowerPoint, made that wiggle. Dear Lord, someone needs to look at this from compliance. Young lady, don't take a picture of that. Take a picture of her snorting, please. All right. Tip number 4, let's talk grain markets before my laptop shuts down. Now, I'd be all too happy to get done in a little bit and answer all the questions you want. I think you can see where I'm going here. These are real numbers. Actually, corn went up 5 cents today, so I apologize. 1 year ago today, Dees 22 corn, $7.50, soy, $17, wheat, $14.25. I got bad news. My name's Tommy Grisafi, and wheat has lost more money in the last year than corn's worth today. How you like that? Because the market sent a signal to the world to grow poverty grass. And you know what they did? There's a big poverty grass farmer back there right now. Some of the North Dakota boys showed up late. How was last night? Thanks for showing up. Everybody can grow wheat. No offense to our wheat farmers, but growing corn and beans, you're special. If you don't believe it, just come up to our booth and tell us, because you've been telling us how special you've been all day. I had a guy come up to the booth yesterday. My partner Dave Fogel was there. Come up. I don't know what his name was. He talked for 10 minutes. I didn't get a word in edgewise. I know you find that hard to believe. And he walked away. I said, Dave Fogel, what the heck just happened? He goes, that don't happen often. He told us there's going to be a drought. He told us there's going to be this. He said, did you know it's dry in Argentina? I'm like, really? That's the first time I heard of something like that. No kidding. Glad I came to Commodity Classic. I wouldn't have known that. The world's changed. And what's happening, and you young guys don't realize it, and young gals have no clue that everything from here on out, we're on the stress test. The tread prices are good, but the incline of the treadmill is going to be a lot higher. Because corn was $7.50 at $6.15. Poor basis, you're $5.75 corn. Now here's the problem. I don't know where you are in your marketing cycle. So when someone comes up to the booth and says, why is corn down? First question I ask, how much 22 crop do you own? They always own some, because if they're upset that it's down, if they didn't own 22 crop, they wouldn't as much care. Oh, I own a lot of 22. I own a lot of 23. Well, of course they own 23. They didn't get 22 under control. How could you get 23 under control? So I have clients. Some are in the room, and some are in the room, and I've suggested it to. There's a young man over here with his wife from Nebraska, and I told him 2 weeks ago, I think you should hedge Dees 24 corn. Did I say that? I did. I even gave you the levels and the prices. And it was a very aggressive thing to do, and I didn't come up with the idea. I'm not that smart. One of my clients came up with the idea from North Dakota. They said, we should hedge the heck out of Dees 24 corn. I go, absolutely. Because you don't have crop insurance yet on Dees 24, but you do on Dees 23. I'll let you out, not hedge as much in 23, but get hedged up aggressively in 24. Now this is someone who had 22 under control, really understands crop insurance. There's a lot of neat things going on with that. Best thing you all have going is you have that high crop insurance that we just got locked in, like $591 corn and say $13.72 beans. So things have changed. Now, you look at those prices and you say, I know what happened, the war ended. Wrong. I know what happened, they got a lot of rain in Argentina. Wrong. Oh my God, what would happen if there wasn't a war? What would happen if Argentina grew a big crop? What would happen if Nebraska got a rain once in a while? How about Kansas? If you look at the drought map, folks, it's getting smaller. Even California's losing out of drought, which is great. If you grow almonds, for this room, it's not going to matter as much. We better start clicking slides. Is anything else going to wiggle? Is there anything else I need to know about? Because I'm nervous up here. All right. I work with my coworker, Paul Dubrovik, really smart guy. No one likes him, but he sent up this chart, and he goes, you got to show him this chart. I go, that's great. What the heck does it mean? I go, what's the red line mean? He goes, that's world demand. I go, that's great. And he's talking in metric tons. I go, Tommy Grisafi, Griffith, Indiana, graduated 180 out of 200. That means there's 20 kids dumber than me. Talking bushels. Let's talk in bushels. He said the market's going down because world demands $1.8 billion less. So while you're all running around, coming up to our booth, 653, telling us Argentina's in a drought, you subscribe to a newsletter, someone gave you a red bucket and they got levels. Oh, red bucket levels. Wow, that's a new theory. Nothing worked as great as bushels, bins, basis. The market wanted your grain. You didn't sell it. We were never running out of grain, ever, even during the war. What happened was Ukraine wasn't able to ship grain. As you remember from that downswoop this summer, an incredible amount of grain left the Ukraine. Now we have this other country we're not such good friends with right now, Russia, that is selling wheat way cheaper than we can grow wheat. And so Russia is flooding the market with wheat. The grain that was trapped in Ukraine has left. And the world, and this was from our coworker Nate Mangold, people actually like him. I said, Nate, what's all that mean? He said, just tell the folks this. So when the war happened, every country in the world that needs to buy corn bought an extra boat. And now they have enough. We've had bird flu. We've had cattle and feeder cattle at record prices. We've had $6 eggs. $6 eggs don't mean there's a lot of chickens or layers. Record high feeder cattle don't mean there's a lot of cattle. And then some countries we're having a financial problem. Dow Jones down 400. Not every country can afford to buy grain. So these are really important numbers. Tip 5, I think that means we're getting towards the end. Tip number 5, I ask you, and these are not my ideas. I learned this in what podcast? Escaping 1980. Good, you guys are fast learners. All right. Actually, it wasn't Escaping 1980. Remember I said there's Escaping 1980, Corn Saves America, the next one? The very last episode of the last podcast, the guy said this, and he was a former banker. Maybe he's in here. He said, farmers need to know, can they handle 3 years of 7% interest rates, 3 years of extremely high cost production, 3 years of declining commodity prices? I don't have to tell you this could happen. You watched it live this week. Interest rates went up. The 2-year yield went to 5.10. It has since declined a little bit. The cost production's high. You know that. You already prepaid for a lot of your stuff. As far as 3 years of declining commodity prices, you've already seen what commodity prices have done in the last year. I'm not up here speculating. I'm not up here making this up. Your biggest problem as an American farmer or a farmer from any country is that times were good, not for 1 year, but for 2 years and for 3 years, and they look like they could be good this year. Now, I'm not completely Debbie Downer. There are some reasons to be massively optimistic for American ag. Things that are happening on the biodiesel, biofuel. What do you call the fuel for the planes, Mike? Say it a little louder, sir.
SAF, or sustainable aviation fuel.
So you know that 777 I took? You come in late, but I took a 777 down here, right? You know what all the signs said as I walked through Chicago O'Hare Airport? We're going to turn garbage into fuel. We're going to turn this into this. Advertisements in the seat concourse. I'm like, I trade that stuff. That's like soybean oil. That's canola oil. My clients grow that stuff. Think of this. You want to be optimistic? Corn has broke 80 cents in the last 3 weeks. Beans are down a dime. That's amazing. Because if you look at if the beans had done what the corn did, because you need to take 2.5 or 3 to 1, if the beans had as big of a drop percentage-wise as corn did, they'd be down over $2.50 the last 2 weeks. So the soybean market has a story, and you all will listen to the markets, and you love to make money, you love to farm, but you love to make a profit. And you will do what the market's asking. And it looks like it wants less wheat, it wants less corn, it wants less beans. Now the problem is, you might have already put your fertilizer down for corn. You might have already done this. You might have already, probably half the people who came here got a trip paid for from a seed company. So you're kind of committed to planting corn, and you like it. Nothing makes a farmer sadder than to have a grain dryer that's not being used that year. They'll tell their wife, I'm depressed. The grain dryer's not burning $100,000 worth of propane. Or for some of you lucky ones, natural gas. All right, I said I'd talk about geopolitical stuff. Let's do it a little bit. This guy's the man. He is the man. Anyone ever see Peter Zion speak? Are you Peter Zion? Okay, is Peter here? Because I'm a little upset with Peter. This is why. There's some great people in the world who've predicted some good things. There's a guy named Paul Tudor Jones. Got fired when he was 21 years old, working at the New Orleans Commodity Exchange because he was so drunk he fell asleep at the trading desk. Paul Tudor Jones predicted the stock crash of '87. Does anyone know how much Paul Tudor Jones is worth? I think, someone Google it, I'm going to go with 14 billion with a B. So Peter Zion predicted with accuracy that Russia was absolutely going to invade the Ukraine. And I should have been listening more to him. But I Googled what Peter's worth, and it said between 1 and 5 million. So what do we learn here today? Predicting stock crashes is very much more profitable than predicting wars. But the day Russia invaded the Ukraine, wheat was trading about $8. And say you're just crazy. Say you're just off your rocker crazy, which about half of you look to be. And you called someone or you clicked on your own trading account. I want to buy a May $14 call. I want to buy a May $12 call. You could have done it for a penny. A penny in options is $50. Those calls, a May $12 call for a penny, became worth $2. You could have spent $50 and made $10,000 on a one lot. And we trade a lot bigger than one lots, Chicago Board of Trade. So I looked up how much Peter charges for a talk. He's between like 10 and 30,000. The guy's one of the best speakers ever. Who said they've seen him? The guy's a genius. I wake up, I watch his YouTube videos. I was hoping he wasn't in the crowd because I was going to pull this slide up. But if he's so damn smart, why didn't he buy wheat if he knew this was going to happen? There's knowing it's going to happen and betting on it. Well, betting, we don't like to say that. Purchasing some derivatives that could go that way. And then there's talking about it. So Paul Tudor Jones is one of the best traders in the world. He put his money where his mouth is. If you think the markets are going up or down, place the bet. I still respect Peter tremendously. He's one of the most brilliant minds in the world when it comes to geopolitics. My only question is, I would do his brokerage for free if he just placed the bet. I want to see him put his money where his mouth is. All right, cost production, simple enough. I'll give you a fat joke. I'm fat. Okay, there you go. Cost of production. By the way, this coat didn't button on Monday, but I didn't drink all week. I walked every day, and it buttons. I think by tomorrow it won't button again. All right. Your cost production's your weight. If I ask this crowd before, I'll ask Frank here. Frank from Michigan. Good-looking guy. Kind of quiet, though. Just sits there, doesn't say much. Very unassuming, but he has a back scratcher in his hand, and you never mess with the man with the back scratcher in his hand. If I said, Frank, are you worried about my weight? What would you say? No would be a good answer. And then Kat, who knows my wife Gina, says, Tommy has $3 million of life insurance. Let him die. Let him die. And then this good-looking guy, Jordan Chrisman's like, we're from Minnesota or North Dakota. I'll bring Gina a hot dish. You know those guys who, like, the second he dies, they're like, go at the funeral, is anyone renting your ground? That's this guy right here. So if I die, don't worry about me. But my cost production is my problem, and your cost production's your problem. I promise you in the next year, farm software is going to be all the rage. You need to know your cost production. It's your problem. I don't care. The Board of Trade doesn't care about your cost production. It's your problem. The job of the market is to weed out the most inefficient producer. The job of the market is to be able to buy as many things with as little dollars. The job of the market is to get back that money you've all made. Over the last 3 years, why is it? Let me ask you a question. Why is it when grains trade under your cost production, y'all come in here and go, well, I'm not going to sell till it gets to my cost production? Oh, Frank's been selling $8 corn for 2 years. His cost production's $3. He's okay with that. We go 299 sellers at the board, and he's going to be all pants all on fire. I got a problem. You guys in Chicago are crooks, which is true. Okay, I got a good trading joke. You want to hear a good broker joke? Dave Fogel and I were standing at our booth yesterday, and these two farmers come up to our booth. And when they start getting into it, they're talking to us, and again, Dave and I didn't get a word in edgewise, but the one farmer says to the other farmer, you can't make no money trading those options. The other farmer got all upset. He goes, that's not true. I put 2 kids through college trading options. The only problem were they were my broker's kids. All right, that's my trading joke. We'll be here all week, booth 653. How does this end for you all? Probably not that bad, because it's not 1980. You aren't maxed out. Even though you wanted to go buy a tractor, they didn't even have one for sale. You already own a lake house. You didn't get hurt that way. You can't buy newer than a 23 pickup. I mean, you could put your name in for the 24. I'm not sure how you're going to spend all the money you made, but I can tell you this. From here on out, you're going to be walking up the treadmill. And the older people who own the land, in that very first picture of those farmers, I bet you, this is a disclaimer, that means there's a lot of risk in futures and options. Those older farmers in that second picture, I bet you they're extremely wealthy. Now, real quick before we end and ask questions, how are we doing on time?
5 minutes.
5 minutes, perfect. It's like I know what I'm doing. Okay, what the heck do I want to tell you? Moving here on out, we want to turn grain into cash. We want to catch carries. One of the best, by the way, when I do work, when I'm not being silly, I work at a bank in North Dakota. I have an office in a bank in North Dakota, in Mayville, North Dakota. I get to talk, I sit next to the president of the bank. So when I tell you about 5 years, 10 years, 2 years, Eurodollars, and I'm a little full of it, I actually do this. When I tell you about helping farmers manage risk, I actually do this. From here on out, if you need cash and you know you owe money, have a plan. I'm going to sell this many bushels at harvest. I'm going to sell this many for Jan, Feb, March. I'm going to sell this many. And then when you're sold out and you go, but I think the market's going to rally, there's this thing at the Chicago Board of Trade called options or futures. Buy it back on paper. The message today is this. You're either paying 8% in interest or you're earning 4% in interest, which, doing the math, is about a difference of 12. But if you're paying 8% interest on a commodity like corn that just broke 20%, that's not good. And they won't get you the first year. But very much like I'm teasing Frank, if inputs stay high, cash rents stay high, new most popular thing in Indiana and Illinois, cash rent auctions. Just tell me what you'll pay. Don't care if you're even breathing, just write the check. It's not personal, just I think I wasn't getting enough from my nephew. Well, it's about $200 under what the crazy guy, the cash rent cowboy next door, who's going to mine your fields and everything else, is about willing to pay. Every time we go through these boom-bust periods, someone always gets too excited at the top. I think that's already happened. From here on out, we need to get back to the basics. Bushels, bins, what else do we got? Bushels, bins, and basis, the 3 Bs. You are in the bushel business. We are in the bushel business. I can't help you if you're not willing to let me help you. And shame on me when I gave that speech a year and a half ago and told everyone to sell Eurodollars and wasn't smart enough to know none of you knew what a Eurodollar was. Our job at Advanced Trading is to educate you, to empower you, and yet I was talking above you. And so if anyone has a question, a comment from here on out, don't be afraid to call. Don't be afraid to ask for help. We have 3 minutes, questions, comments, giggles, anything.
I got a question.
Yes, sir, young man in front.
We're in the process of buying a farm. And of course, we really
No is the answer. Okay, next question.
should we back out or
I mean, I don't want to ask you how much you're worth or why you're doing it, or is it next door? I would imagine it's next to property you own.
we're only going to borrow about 20% of it, but
Go for it. What do you got to lose? What's that? Repeat the question? Oh, the question was, he's in the process of buying a farm. And he's pretty young, but not as young as he used to be. And so I had asked him, how much are you borrowing? He said 20%. I said, let me guess, the farm's next to the other farm. He said, yeah, do it. You're not doing it for yourself. if you love yourself, sell your ground, go buy a big lake house and a jet. If you love your kids, keep some ground. If you love your grandkids, tile it, all right? Tile it. If you love your grandkids more than yourself, tile your ground. If you plan on being in the bushel business and the whole world's just inflated all these prices and ag's not just only good in America, it's good all over the world, if we've had 3 years of good times, we could have 3 years of bad times. Let me ask you a question on a follow-up. Would you buy more if it broke 25%? You're probably going to get that chance. All right? I don't hope for anything. It's going to happen. Nothing you or I say or do is going to change the course of what's going to happen. 1 or 2 more questions, please. Yes, sir.
Are wars inflationary?
They are. They are. So the question is, aren't wars inflationary? But wars are not fought the same way they used to be. When our government is funding a lot of this war, I don't know how to answer that question. Are wars inflationary? Yeah, it was. We had a phase, but we're not $6 diesel anymore. We're $4. The number one way our government could lower inflation is to let us pump more crude. We have these natural resources. So what I forgot to mention, slide 1, thank you for bringing that up. I don't really know the answer. Peter Zion would, and for 20 grand, he'll do an hour meeting. But the deal is this, is that our United States government and other governments around the world created inflation. We are now asking them to stop the inflation, and the number one component of inflation is energy, and we have unlimited energy, but we want to feel good, so we're not going to do anything. Our United States government could stop inflation like this. Open up 100 wells in North Dakota, and you're going to see things calm down. Now, what's so scary about what's happening? Someone check on the Dow Jones for me. As the stock market crashes, we can't bail people out anymore, because if the government does a bailout, that's massive, massive inflation. If they give you money for doing nothing, which they have, all of us have benefited in some way, it creates more inflation. So inflation is a conundrum. Inflation is a cancer. And if you don't treat cancer, imagine you have cancer. What's your first name? Jeff? Jeff's got cancer. I'm sorry to hear that. And I'm his doctor. And I say, Jeff, I got a treatment. We're going to give you 10% of the normal dose. You're going to go get another doctor. You're going to go, this is a nice veterinary place you work at with cats and kittens and stuff. I'm going to Mayo. So what our government did when we got inflation, they gave us a light dose. Now it's going to get interesting. I wish and I hope, and thank you, Commodity Classic, I hope I get to stand here a year from today and see how this story ends. I don't think it'll be with really high grain prices, but I do have one thing. For you permabulls who can't stop at any point, the great state of North Dakota and South Dakota have 2 feet of snow laying across it perfectly. And if we get 2 million acres of PP in North Dakota, 2 million acres of PP in South Dakota, we don't have enough corn acres. And we already know by the strength in the bean market, we're fighting for beans. So this bull market may not be over. The question is, go back to that one slide. Can you handle 3 years of 7% interest, 3 years of high cost production, and 3 years of low bushels? It's not, can we have another bull market? Sure. Go spend first thing this morning, my clients received a text, I'm buying July calls. I want you to own July calls. Spend 18 cents to own a July 630, 640 call. You have your risk managed. You want upside? Buy it. I have never grown a crop in my life except for 1 crop, 2 crops. I have 2 daughters, and one of them is going to state gymnastics tomorrow. And if you got anything out of this meeting, make sure you take care of the most important crop of all, your family. I don't want to cry. But this little girl, she's incredible. She's #1 in the state of Indiana for gymnastics. She's never grown a crop either. She don't have to. Her dad owns Seed at Board Trade and can buy all the corn he wants. Any other questions before I get all emotional?
So,
Just give me a hug. Bring it in for a hug. What's your name? Andrew? All right.
so Peace corn
Yes, sir. Which year?
this year,
Okay.
23 piece corn. So we've been obviously watching the corn market go down, but our crop insurance coverage is like $5.95
Mm-hmm.
per bushel. And be your opinion on seeing a bottom for D-score before we see our typical summer rally? And what position should we take at that point?
Well, there's a lot of questions, like, you know, the President of the United States even knows the questions before they come to him, and they already knows the answer. I know so little about you besides you're wearing a yellow shirt, and you're a good man. If you want help managing risk and want professionalism, ask for it. I don't know enough to, you know, you're saying you have a temperature and I'm giving you the prescription. I'm not sure. I am super excited about your crop insurance level. If you normally buy 80%, talk to them about buying 85. What I do know about crop insurance is it's the cheapest put, the cheapest floor in the United States. The United States is giving you a put that is wonderful. We have puts at the Board of Trade. That put at $591 is better than what I bought for people yesterday in the sense that at $550, but it doesn't cover all your crop. And real quick, you buy 85% crop insurance on a normal yield. What happens if you have above yield? You still have a ton of crop that's not protected. So how protected do you want to be? I own $3 million worth of life insurance. That's how protected I am. It's up to you. You're the president and CEO. The hardest thing as a commodity broker and commodity trader is that you say there's 20 things to go into growing a crop, and you're going to do 19 of the 20, and I'm the 20th, the selling. And then you go, I don't want nothing to do with that. You do it. Well, that's a lot of responsibility for me. I didn't become CEO of your farm.
Follow-up, though. Typically,
Typical reporter from Bloomberg.
correct me if I'm wrong, but
Yes.
we'll set the February price, because I kind of look back at this in 20, when we had our COVID crisis, and you know, and we all were panicking, we'll never get a second chance. And that price you'd set, it always rallies above it.
Always?
Always.
Always?
Always.
Always?
Am I?
So every time it goes down, you just buy 1,000 futures? 1,000? Because it always does it. Are you sure about that? You want to retract that one? Always is all really often, really consistent.
Very good.
Most of the time. The price doesn't always come back.
I'll take the Peter bet. I'll put my money where my mouth is.
Okay. I want to see this always chart, that the market always beats the crop insurance level.
And the fact that at some point in this growing season, we typically have that chance that it'll go back above that 595.
Which it does often. You're correct. Yes, sir.
That's what I'm going for. So how do we position ourselves so that we can catch the rally back up?
You want to buy dips, sell rips. That's what you're asking to do, right?
So how do we position ourselves so when we see our bottom sometime between now and who knows when, to catch that second wave up?
You could buy options. And I do very much know what you're talking about because,
You got my trip fund.
yes. Because my client who signs up for a different type of crop insurance, I'm not a crop insurance guy, but there's some new things. He did something very aggressive today because corn broke so much from the crop insurance level that he bought 250,000 bushels of upside. In your name again?
Andrew.
I'm a slow learner, Andrew, but I understand your point. So you put your money where your mouth is. Corn's at $5.95 on your crop insurance. It goes down to $5.40, and you buy calls or call spreads. And a lot of times it does go back up, but not always.
I'm not saying that at the fall harvest price it might be below 5.
Right, and the markets are dynamic. They're moving. But one thing we know about crop insurance is that crop insurance price is set in February, and then it doesn't change till harvest. And so the crop insurance is static, and the Board of Trade futures and options are dynamic. So to your point, great point, you combine futures and options with that crop insurance, and you could be deadly. Even if you don't grow the bushels, you can trade around that crop insurance point, their crop insurance prices. And that was a great question. Thank you. Thank you very much. Thank you all. My time is up. I don't want no riots here. I'm leaving the stage.
Andrew, Tommy gave me a motion that he can start charging you if we'll stop this session. So we're going to call it a stopper. Extremely informative in a very educational and fun way. So thank you,
Thank
Tommy.
you.
Help me give him another round of applause.
Thank you.
Thank y'all. Have a good evening.